Hey guys, welcome back to this YouTube channel. It's been a while since I posted a video. I lacked a little bit on content lately, but you're definitely going to want to stay to the end of this one. I swapped some things out. I actually swapped GU out for gold, and I just started trading gold again. Today's going to be a recap of a couple of gold trades I sent out today, and I'm going to show you what I looked at to get in the trades. I'm also going to show you how I closed the trade before it hit TP based on the DXY and what caused me to do that. So definitely stay till the end if you already haven't hit the subscribe button. So let's kind of walk through everything that's going on. Overall, gold's obviously very bullish on pretty much every higher time frame. My story started here. So we took out the weekly low here. So that's kind of my higher time frame analysis. That's as far as I need to go for higher time frame. There's nothing on the daily for me. There is something that does pop up on the 4-hour. Now you guys know I trade a liquidity and efficiency system, and gold is one that looks for liquidities in all kinds of places. So instead of me just using vector liquidity or just lit, or just Asia highs or just Asia lows or previous day's highs or lows, I found gold likes to liquidate all kinds of random areas, such as areas like this. And if these zones line up with a supply and demand getting taken out or support and resistance getting taken out, I found gold really likes to liquidate these zones. Now this is nothing against these styles of trading. This is just what I found the pair likes to do and manipulate. And I'm going to kind of show you how I kind of integrated support and resistance into RLS, my system, but not so much to trade off, but to find liquidity. So this was kind of the reaction I got on the weekly. On the 4-hour here, we got some vectors. What I want to show you here is we take out this daily high here. For those of you that have seen any videos before, you'll know that this is lit. Lit is a continuation model. So this had me looking for buys. I can also tell that this is not a trending market for gold right now. We have FOMC coming up in 2 weeks, so gold may be sluggish till then. We also have some inflation readings later this week. So when gold is trending, you can kind of see, well, this is maybe a bad example, but when gold is trending, it doesn't really pull back a lot. So you can kind of see gold breaks out, there's your range, it doesn't rebalance. Gold breaks out, doesn't really pull back to 50. Again, gold breaks out, doesn't pull back to 50. So when gold moves, it seems to not even come back to the 50. Whereas when it kind of consolidates, it does the opposite, and it likes to kind of sit in that 618 mark and the 786. So if we just look at these ranges, you can kind of see where gold is reacting from. Now, you don't need a fib for this either. You can kind of see how gold is just, it's really not breaking out. So my expectation was to come somewhere in here and just continue up. I wasn't able to catch the very bottom as I was still asleep at that time, but I got a pretty good entry and a decent stack. Now, some things I want to mention, and again, this is not anything against any style of trading, but I've found that gold, we're just going to maybe change these colors to that. Gold likes to liquidate support and resistance zones, supply and demand zones, but it doesn't liquidate them in a way where it completely fails the zone. It'll do it in a way where it almost creates a fake reaction, liquidates the early buyers, then it takes off. Some of you may consider these zones failing, some of you may consider these zones holding, and you can see it here. There's your resistance, becomes support, price punches through, induces people into thinking that we body close through the support and resistance and it's actually failing. But what it actually did is it created a bunch of early buyers and it took them all out and it continued with the bullish trend. And you can kind of see same thing here, support and resistance, early buyers liquidated, price goes up. So for me, when I came to the charts, I use this particular entry model for gold. So what I like to see is either support and resistance or supply and demand. I don't care if the zone holds or if the zone gets liquidated. What I want to see is early buyers and sellers get liquidated, and then whatever candle liquidated those people, I want to see that candle get taken out. And that's kind of how I enter gold. Now, it doesn't necessarily need support or resistance or any of that. Like, it can just use daily highs and lows, weekly highs and lows, lit, vector liquidity. Gold's not really a pair that seems to care where it gets the liquidity from. As long as it has liquidity, it keeps moving. So let's kind of look at this on the lower time frame. Just to give you an idea too, I didn't even leave the 15-minute time frame to take this entry. So now if we refine this zone a bit, you could probably get it down to something like that. Maybe even refine it a little bit more to a lower time frame. And you can see the same thing, and gold seems to like to do this to where it'll even give people the body close through a support or resistance or supply and demand or whatever. And it's always the same thing. It's that fake reaction. Early buyers take out the early buyers. And then all we're looking for is the candle that took out the early buyers. So had I been awake and traded London, this would have been my entry. That wasn't an option for me, so I don't get to the chart till around 4:30, 4:45, sometimes even 5 in the morning. So I got to the chart around here, and I think half of this candle was developed, or like a third of it or something. So I just took this, I believe I covered somewhere around 40 pips, 45 pips or something. And my initial target was actually the nearest liquidity past the daily high. This is kind of where my projections put me. And this was my nearest liquidity, was this support and resistance. So my expectation is gold liquidates these guys, maybe liquidates again, and we see a retracement, maybe a continuation. So obviously a little bit far away, but this was the zone I was looking to hit. And usually what price likes to do is create build up, target liquidity, and then if the market needs more liquidity, it'll target the build up, and then it continues on the higher time frame. So again, this is probably, the next couple days worth of stuff. But, so this was the first entry. So my initial target was actually to liquidate the 2770. I ended up adjusting the TP after I seen the way New York started moving. So we can just kind of fast forward through this one. The next entry, I actually ended up going down to the 1 minute. So, with the way I like to enter, my ideal scenario would be to continue with what we've been doing. So, this is called market rhythm, and the rhythm is that we're reacting between the 786 and the 618. We're reacting between the 786 and the 618. So this fits the storyline. We take out the candle that induced sellers, close through the resistance or support or whatever you want to call it. We also liquidate the other side of the early buyers. So these candles are kind of the important part of the story. So with what I see here now, my expectation would be to pull this leg, and wherever this high ends up, I would once again look for an entry below the 618, just because that is the market rhythm. So I don't remember, and this might have been as high as it went. So now I need to find liquidity in these zones. So there's a couple of places to find liquidity. So first I'll look on the 1 hour to see if anything really stands out. Nothing really stands out to me here, so what I'll do is maybe check out the 15-minute. So I might have actually gone a bit too far. I'll go and I'll show you guys what I looked at on the 1 minute. So again, we're looking for liquidity. Obviously we got our vector liquidity, we got our vector candles pushing, we had a hell of a reaction. We just want to continue this same push. We had a news release, and ultimately same thing. This is your support resistance. Same pattern I just showed you guys. There is your initial reaction. And no, it's not going to work every time, but when it does, it sets up rather nice. So same pattern again. We liquidated the early buyers. Also, this might induce people into the sell side of things, thinking their support and resistance failing, thinking this momentum may carry through. So they're kind of inducing both sides when they do this. And with the currency pairs, if you use this method, I find what price will do is it'll just leak through and just wick through. Whereas gold, I find, will actually body close through, where people will be like, well, it bodied through, so it's definitely going that direction. So gold's a little bit meaner that way. And again, we take out the last push that induced the people into the sell side. So here you can pretty much execute this. Not a fan of too small stops on gold. So I'm anywhere between 25 to probably 90 pips, depending how I get in and what time frame I get in. This one happened to be a nice 1 minute entry. And hypothetically, this was the thought process. As I kind of seen price action develop, and I kind of started losing faith in it, so I actually ended up adjusting my targets to here, and I actually ended up closing them out even a little bit earlier. So my exact closeout was, let's see, 61.33. Okay, so 61.33 was the actual closeout. I could have probably closed these in a little more profit, but it's really not a big deal. So it ended up being well over 5 hour, like 5.5 hours or something. And the reason I ended up closing these out is, I'll show you guys. One, we're heading towards the end of New York. Two, you can kind of, so I'll show you guys this. So you see how gold is pushing up. So in a perfect world, we want to see DXY pushing down. So now this is where the discrepancy happens. So if gold is pushing up, so DXY here took a low, took a high. It kind of started stalling out here and didn't take this low out. So when DXY reverses, a lot of times it's telling me the other pair is being manipulated. So with this in mind, had DXY punched through this, I would have likely held gold to the 2370. So if this candle, looked like this and we took this low out, I would have just held gold. Because the DXY was losing steam, I've seen it reverse other pairs. And what usually happens is this here is kind of trying to push up, but DXY is clearly going down. Hold on, let's see if we can. Let's see if we can. Alright, what do we have here? Oh, this is actually DXY inverted, so this is perfect. This is perfect. This will make it explaining easier. Alright. So, with DXY inverted, inverted being prices going down as we're heading up. So I invert DXY, it makes it easier for me to read. But you guys can see what happened here. So on the opposite side of the spectrum, if this candle closed above this, that would have gave me faith that price is going to continue up in gold. It really didn't. So with how little our moves are, and this is what I expect for the next 2 weeks, is little moves on everything until FOMC, I basically am willing to close that out. Also, DXY took out a major daily liquidity for me, so my expectation is DXY will seek something out here to continue. So just with these things in mind and me seeing this pattern play out in the past, I choose to just take the profits. And this may run to TP, it may not, but I just, I would say 3 out of 4 times when the DXY doesn't correlate with gold the way it should, I end up losing money. So that's my early telltale sign to get out. I do the same thing with Euro. So if my TP was here, let's say, and DXY took this out, but Euro was like around here, I'll just close Euro out. If DXY took the target out, it's good enough for me. Again, I'm just seeing it reverse lots. So yeah, I hope you guys enjoyed this trade recap. I'll try to do more of these. I'll try to keep them a little more educational too for those of you that are still trying to figure this out. Make sure you tune in to the next videos that I release. We'll keep them educational, we'll keep them fun for you guys. I will see you in the next one.